Hey, this is Matt from InvestiQuant. Today is Tuesday, January 19th, 2021, and this morning we saw sizable up gaps in the markets. Gapped up well above prior session's closing prices. We gapped up above prior session highs in many of the markets here, and we pushed lower off the open. So we had pretty weak price action off of the open, but we have since stabilized and are starting to explore higher prices. We are trading up through the highs here in the S&P, which is this top left chart, through the highs in the NASDAQ, which is the bottom left chart. Russell just ticked through its highs, and Dow is still trying to catch up to the rest of them here, but we are starting to see some strength coming in. So what I want to do is look at this pattern that we've got taking place here intraday and see what it has led to as we approach the close. So let me hop into Discover, load up all four instruments for an intraday time-based entry of 3 p.m. Eastern Time. So this is going to be getting long at 3 p.m. Eastern Time. It's going to be based upon exiting at the close of regular trading hours, which is 4:15 p.m. Eastern Time. Next, I'm going to go to this opening filter section. I'm going to say that we opened above the prior session high. So I'm going to click right here in the opening area, equals next to open above prior day high. Then I'm going to go into the post-open filter section where I can add the price action that we are seeing develop. And the way I'm going to describe it is I'm going to say that we have not filled the gap. So we had early weakness this morning, but we never made it to the prior closing price for the session. So I'm going to hit equals here next to gap not filled. And then I'm going to say that the open of today's session is in the top portion of the range, the top half of the range. And I'm going to do that by coming into this open versus intraday range section. I'm going to hit equals next to open and top half of intraday range. And that means at 3 p.m. Eastern Time, the opening print is above the middle of the range. And then next, I'm going to say that the price at 3 p.m. is above the open. So I can come into this section, intraday close, versus the intraday range, and I can say that the close is greater than the open. The close is referring to that 3 p.m. price since that is the time of the entry. So that means the open is in the upper portion of the range. We did not make it down to gap fill, and we are trading above the open at 3 p.m. Of course, I don't know if that's going to be happening, but currently that is starting to develop, so I'm trying to anticipate this pattern that is taking place. And then lastly, I'm going to go into the indicator section, and I'm just going to add above a 200-day simple moving average. Normally, I'm adding a short-term moving average to this as well, but because I don't want to get too light on samples, I'm going to leave the short term out and just go with the longer term here and then click view results. All right, here we go. These are the results of going long at 3 p.m. Eastern Time, exiting at the close, which is 4:15 p.m. Eastern Time. When you open above the prior session high of day, you do not retrace to the prior session close, and at 3 p.m. Eastern Time, the open is within the top half of the intraday range, and the 3 p.m. price is above the open. So that means you've got a longer wick that is forming, or at least a wick of half of the day's range forming below the market. This is taking place above a 200-day simple moving average. And looking at our stats here, it looks like we've got 34 samples of this pattern dating back to 2003 for the S&P. We've got 30 for the NASDAQ, 21 for the Dow, and 14 for the Russell. So pretty light on samples there for the Russell. That's one of the reasons why I wanted to keep that short-term moving average out of there, because I just didn't want to get too low on samples. But we've got a little over 30 in the S&P, similar size there in the NASDAQ. If we take a look at the win rates here, the S&P much stronger in this than some of the others. So S&P coming in at 68% of these continue higher until the close from that 3 p.m. price when this pattern is in play. Now for the NASDAQ, it's pretty neutral, and that's the same case there for the Dow as well. Those 52-53% win rates there, not really showing an edge with this pattern. And then the Russell, 71%, but 71% on a small sample size, so keep that in mind. If we look at average win, average loss, they are nearly identical here in the S&P. They are nearly identical in the NASDAQ. For the Dow, average loss just a touch bigger, and for the Russell, the average win just a touch bigger. But if we're looking at this pattern here, we are seeing the S&P a little bit stronger here than the other markets. NASDAQ and Dow not really showing an edge, but S&P has been fairly strong into the close when this pattern has taken place. Russell favored as well, but on a smaller sample size. So hopefully you found that helpful. Good luck the rest of the day, and we will see you next time.